for those that are here, thanks for attending. And Dima, if you can keep admitting people as they come in, that's a big help.
Will do.
But yeah, wow, 9 March. I suddenly occurred to me we have a little over a month left of boot camp, so we are getting toward the end of things in a way here. There's lots of trading left, but we're kind of approaching the last third of boot camp. So moving right along.
John, are you recording?
I am. Yes. Was there any indication I'm not recording or?
Yeah, I don't see it. I didn't see the 3, 2, 1, and I don't see the in green.
No, it's good. It went off.
Okay.
The clock's counting over here. So the dashboard. Let's take a look. Oh, I should have had the web page open. Okay. I know we have a couple changes to the schedule, especially as it pertains to Mike's Tradebook meetings. Okay. Let's see. This week, it's where the hell am I? It's the 9th. Okay, so our next two events are a normal time for Peter mastering the concept of risk management and trading rules. That's next Monday at 7. And then I think the remainder of all Mike's trade book meetings have been bumped to 6 p.m. And sorry for that change. I think Mike's got a series of doctor's appointments that he had to schedule, and they just to deconflict, to get out of the conflict, he had to move them by an hour. So apologies for that. I hope you guys can still attend those trade book meetings. Do you guys prefer stuff is closer to the close, or do you prefer a bit of a break before you get into the next thing?
For me, as early as possible. Good afternoon or good night, everybody. Because for me, the market closes at 9:30 p.m. So the sooner the better, I guess.
Yeah, okay. Yeah, so I'm sure a lot of these classes start pushing midnight for you. Okay, yeah, I'll have to think about that as we go into the next boot camp. Because I could even push this meeting closer to the close. I don't want to put it right at the close because some people trade into the close, and then it would create a bit of nonsense. But we could even push it 15 minutes sooner. But some food for thought.
The 30 minutes is fine. Maybe, I don't know the amount of Europeans that you get normally on the boot camp, but maybe throw in a survey before to see if you guys need to adjust time schedules for the next one. Not that it interferes a lot with my life. Even if I had a full-time job, it was even better, the current schedules, because it would never get on top of my day-to-day.
Gotcha. But, yeah, we have enough people from Europe. It's obviously not the majority, but there's enough at every camp that it's definitely something to consider. Added a couple check marks here to our roadmap, and again, very general journey here, and this idea that now you're in practice mode. Obviously, like I said, we have a bit over a month left in boot camp. I think the last training day is April 14th. So obviously we've been in practice mode as well, but what I did check off here is establish boot camp plan, which may sound like a phrase that's like, wow, that's kind of like, shouldn't you have that much earlier in this process? But the idea of establishing a boot camp plan, what I mean by that is, again, a lot of people came into this boot camp very fresh, very new to trading, and for those people, you can spend quite a lot of time figuring out the technology and figuring out what trading's all about and figuring out what you might want to trade. And what I mean by establish a boot camp plan is like it's probably for just about everybody at this point. You want to zero in on something so you can collect some data and find out some information that'll help feed your trade book. There could literally be people at this point who haven't really started to focus yet and totally understood. But we are approaching that last third, so at this point, you want to establish a boot camp plan. Like, what am I going to do for this last third? What's the strategy going to be? How am I going to collect some data? How can I gather information that'll help inform this trade book that I'm trying to write? One-on-one sessions. I'm going to send out an email. I'll try to get it out tonight, asking people for people who want to have a one-on-one session. We try to do this mid boot camp. We're a little late this time, but I don't really think it's a big deal because you kind of know yourself better the more boot camp goes on. But this is a good time to do it, to talk one-on-one with either myself or Dima to kind of look at where everyone is and then make a final map from here to the end of boot camp. So if you would like to have a one-on-one session, just reply to the email that I send out and let me know, and we'll put you on a spreadsheet, and we'll figure out between Dima and I how to divvy everybody up. If you have a strong preference about whether you want to meet with me or Dima, you can let me know. I will tell you, we will provide a quality experience either way, and Dima and I have very similar brains when it comes to trading, and but also sort of unique ways we think about things. So I think you get a good discussion either way. So yeah, look out for that email. I'll get that out tonight. So somebody asked for a. So somebody asked me via an email they wanted to see a leaderboard of how people were doing. I guess Peter shared with his group a leaderboard, so to speak, of, top people. I don't know if he showed like where everyone is at. I don't think he did. I think he probably showed the top 10 accounts or the bottom 10 accounts or something along those lines. He probably hid I'm sure he hid people's PCT numbers anyway. But I understand that request because it is a very curious thing as you go through this process. Some people are doing well, some people are struggling, and you kind of want to know, where do I stand? It's like, is everybody struggling, or is it just me? Or, I feel like I'm doing well, but are people doing much better than I am? These are very natural questions. I totally get it. But I don't want to show a leaderboard per se, because I don't see this as a competition. And I think that's an important thing for everyone to realize. Trading is a competition with yourself. If you even want to use, I don't even like to use the word competition, but it's a journey. It's your own personal journey. And it doesn't really matter how other people are doing. It really doesn't. I understand the curiosity, but at the same time, I don't want to show those kinds of numbers. And there's some problems with that I can talk about here as well. But if you're curious with the way they come out, I just ran some quick stats, and the average account's at 98,300. The median's 99, it's a little bit higher, 99.1. The minimum is 8,600 thereabouts, and the max is about a $4,000 profit. And you can see a histogram of the results as well. You can see the highest bar in the histogram by far is sitting around break even. But while this is academically interesting, keep in mind some of these things down here in the corner. This is why I don't think it's useful to show a leaderboard or whose profit is up or down, because we have some participants that showed up for one day of boot camp. I know one in particular showed up, made like $2,000, and I haven't seen this person since. So, I could show you that, but I don't know what happened with this person, and it's not particularly useful, right? We know nothing about their trading. We just know that someone showed up, had a good day, and then hasn't been back to boot camp since. This shouldn't be 2 bullets here. I don't know how I did that, but another thing is, how much is a participant risking per trade? Someone could have $200 per profit risking $5 per trade. They might be doing very well, right? To other people, that's just a good day, or that's half of a good day, perhaps, or whatever. So, again, without seeing their full equity curve, it's just it's not particularly useful information. And then there's this cases like this. This actually, the person who was asking for the leaderboard kind of had an equity curve that looked like this. Not these exact numbers, but you could be someone who started boot camp and you traded, you didn't know what share size to use, and maybe there's a bit of indiscipline, you weren't really focused yet, and you find yourself down $3,000 at the beginning of boot camp. But now you might find yourself only down 1,000, and this is that equity curve shift I talk about that you often see in boot camp. This guy asking for the leaderboard is experienced exactly this. He has a really good looking equity curve. He had a struggling start, as is often the case in boot camp, and now it's climbing back up, and it looks great. So, I honestly, what I told this person, I was talking about Dima with it today too. You could have an equity curve that starts off when boot camp started. You could have just done well, and you could have ground up. Maybe it's this person who has 4,000. Maybe they just ground up to 4,000. Another person could have lost 4,000 right off the bat and has now ground their way back to zero or break even, $100,000 in buying power. Both those things to me are about equally as impressive. I guess it's a little more impressive the guy who starts off, guy, girl, whoever, I say guy without gender in mind, but a person that starts off and immediately makes money and has a nice looking curve, okay, that you probably knew how to trade before you came here, and it's probably a person looking to tighten their screws down a bit, and get a little extra education and attention. But it's nearly, or it is equally as impressive to lose 4,000 and then produce that equity curve that gets it back. In fact, it's actually very impressive to see that, because to recover from a loss, to start boot camp and lose money and then say, all right, I got to make a change. I've got to change something about what's going on. You got to recognize what the problems are and then change those things and grind back out of that hole. That's a very impressive thing. So anyway, with all those things and these bullets here, these kind of get at why I don't know. I don't see much use in saying these are the top 10 accounts or anything like that. Anyway, but more importantly, I do see people with shifting equity curves, and I love to see it. I told you guys, I don't know if you remember, but we talked in earlier meetings, like, we're going to see that. And that's cool. That's why we're here. I have my real life shifting equity curve, I had to turn around as I was completely destroying my account as a young trader. Any questions on bootcamp stance? I don't know what else I could tell you. Okay, just keep on keeping on. Today for the meeting, I want to talk about. So last week we talked about making some kind of rough observational thesis about something you were seeing in your trading, and then this week my intention was, at least for myself, to come back and show some numbers. Just take not like a real in-depth statistical analysis. I did not do this. I took what I would call like a first peek at my data, just to see what's the very basic story it's telling me. I don't know if anyone out there ever works with data for a job, or but if you're a data scientist or an analyst for a company, if someone gives you data in a spreadsheet or a database, what a good data scientist will tell you, the first thing you want to do is just start playing with the data. Just start ripping it apart a little bit. Make some pivot tables, make some charts, do some very basic analysis of what it's telling you. More advanced analysis can come later, but the first thing you want to do is say, what is this data? Like, what's this column, and what is this stuff, and what's the average of this, and what does this look like in a histogram? That's just basic kind of tearing it apart. It kind of gives you the clue of where you want to go looking for more advanced analysis. It tells you the first story of what the data might be trying to tell you. So that's all I intended to do today, and that's all I can show you from what I've done. But by doing some basic analysis on what I looked at, I have more questions. I know I need more data, and I have new questions. So, and I got some weird results. Not weird, but unexpected, I guess. So we'll look at that in a second. But Dima put together her own slide on not her analysis that's complete, but what she wants to look at in the future, which is a little ways out, I think, because she has some information to collect. But in any case, Dima, over to you.
Yes, thanks, John. So level 2 for me, I watch it. Lots of people, traders, follow it. But for me, it's not a criteria in my trade book at all, in any of my strategies. It's also not a violation. So if I don't follow it, it doesn't matter. But it's there, and I watch it, and I have the highlighted bigger orders. So really didn't think about it before, but I thought I should. And does how much? I know it matters, but how much does it matter? So the rough observational thesis is many traders base their entries, partials, and exit on level 2. I know Tiffany bases her partials on level 2. Does level 2 matter to my trading plan? So generally, I watch it to confirm a bias one way or another. So it's just a confirmation. If I want to go long, are the orders or one side or the other? Does it give me bullish look or bearish? But how much weight does it, should I give it compared to my other criteria? Because I have some criteria that are, minor, and when I don't follow them, they might affect the trade, but not as much. So should it be a criteria that I have to follow and hold myself accountable for? Or is it just nice to have confirmation, like my ATR, RSI, and even the MACD that I have on my 1 minute? Those don't affect the decisions, but they're nice to have confirmations. So the initial analysis plan is in February 2022. I started a sample set to help me determine how important is level 2 to my trading plan. And as I did that, I like things black and white. I literally made a column, and it's a 0 and a 1. It's 1 when I see it and it supports my trade, and 0 when there is nothing there and it's not part of the decision. So I did that. I realized there is a few challenges. Need to test lots of trades. So I decided that I'm going to do this for 3 months, February, March, and April. And each sample set is 20 trades. So 20 trades at a time for 3 months. We'll keep doing that. So in February, for some reason, I just did the whole sample set manually. Not for some reason. I do most of my sample sets manually, but I needed more detail. So I'm going to utilize TraderView with that info. So I had just I added 2 items to TraderView regarding my level 2. And we'll see. But now I'm realizing I'm going to need more if I want to, have more confirmed answer. Because as I'm looking at level 2 and thinking about all of this, level 2 has many components. It has the size of the orders. It has a location. Where is it? At the top of level 2, in the middle, or at the bottom? Right now, I just kind of look at it and, want to see the orders in the middle to confirm one way or another, and big orders. But I don't really differentiate when I say 1 or 0. I don't differentiate. Is there more orders on one side than the other side? That's good enough for me. And then there's the stacking, and then there's the ladder. So how do I define that? Because the other challenge is, unlike charts that you can go back later and find out what you did and what was good and what happened, it's hard to see. Well, you can't see level 2 later on. You can't see what you did. And I write notes, but I don't remember. I don't remember how it was and what orders and how it was stacked, or the ladders, or, all of that stuff. And sometimes the orders, even you have to scroll down, even though I have my level 2 in the full height of my screen. So these are all questions that came up if I really want to define this, because we need black and white answers that you need to be able to repeat the testing to make sure. So then the goal is to establish the importance of level 2 by the end of April 2022. Because the other question is, when I use the level 2 and it's a green trade and it gets a tick that I used it, is it level 2 that affected my trading, or is it my criteria that I've been following? So there's all these questions that you want to be able to isolate all components. So in February, my preliminary findings is in February, 71% of my green trades had supported level 2. So I saw something, I followed the criteria. Actually, not necessarily. At this point, it's only green and red. A green trade could be a trade that I got lucky on. But either way, I did mark that I saw something in the level 2 that was supportive. And then 28% of my red trades had the support of level 2. So so that means, that's good news. That means it's important, but how important? When it was a red trade, did I follow my criteria or did I force the trade? That matters, because then that negate the importance of level 2 if I didn't follow my other criteria, right? So there's more questions than answers as I start digging into this. So I added some more tags in TraderView, and we'll go from there. Let me know if you guys have any questions.
That's cool, Dima. It's going to be a hard thing to get after, I imagine, for the challenges you listed. It's such a dynamic thing to try to capture in a moment. Like, what does the level 2 look like as orders are added and removed, and all the trickery that can go on with the book and whatnot. But on the flip side, trading's all about market behavior, and
Yeah.
the level 2 is the market. That's where it is. That's the people saying, are they, do they want to sell up here or down here, or buy up here or down here, whatever. Like that's the story. The whole story is there. The chart and all that stuff is lagging information about what happened, but that's your only portal to the future, right? Is the book. So yeah, that's cool. Do you have any ideas of how you might simplify how to grab stuff from the level 2, how to capture, like, whether it,
Well, the only thing I was thinking that I know works, but I've been so resistant to it, is to record my screen. I don't want to record my screen. I don't want to go back and add another component. Like, I'm not sure if this, like, I'm trading okay with the way I use level
Yeah.
2. So is it worth it for me? Having said that, this is the only thing I'm curious about. Everything else is tested. So
That's hard because you could see a big ask, for example, and then, okay, you could record your screen and make note it was 50,000 shares at this price level, and then it starts blinking on and off. Oh, it's gone, it's back. Is it serious? Is it not? Like, do I count it? Yeah, but I think it's worth the effort. I'd be interested to
Yeah.
see what you come up with for sure.
yeah, I think so. I'm going to just chip at the information and see what happens.
Does anyone else out there capture in a journal anything about the level 2? Or
Yeah, I record my trades videos, and I did that specifically for level 2. It's painful to go back and watch the video and track, but I even, for some of my trades, I used to slow them down to actually keep track of the orders and see how they how they work. And then now I'm trying to take partials with level 2. It makes a big difference. I literally place my orders right 2 cents or 1 cent above the biggest order on the level 2, and it hits every time, as long as the trade is going in my direction.
yeah,
But it does help. I know all of my trades, as far as I've captured, if the level 2 is supporting the trade, it is going to be a green trade for me. So
nice. Yeah, it speaks to the benefit of not trading as much. I mean, the more in depth you want to get in journaling, the better it is that you take fewer trades so that you have the time to get into them. But there's a balance there. You want a good data set, right? You should take good setups. You shouldn't ignore a very good setup because it's important to journal. Let's put it that way. But there's a balance there. I've noticed on high.
yeah, it becomes tough. It becomes tough on stocks like Nvidia, where the level 2 is going to just display 0 or 1. So you can't make sense there. But NEO will have a really good level 2. So it also depends on the stocks that you're trading.
I've noticed recently, I don't know why I've never noticed this before, but I guess just as you trade longer, you can pay attention to more things. You'd be amazed if you compare what you can pay attention to when you first started trading to what you can pay attention to a year into trading or 2 years. You can just consume visually more information. It's actually kind of impressive to watch, but I noticed a few trades recently where I'm taking a high day break, and I love to have a big ask that I can eat through and get a bit of a pop. But I notice sometimes when my trade is struggling near my entry, I'll see a big bid come in underneath me, and I've started to look at that as an extreme warning sign. You might think, oh, there's buyers supporting, price nearby, people still want to be in, but it's actually doesn't seem to be a good thing. It kind of works the opposite way. When people beat through that bid, then boom, it falls back hard the other way, and it can stop me out hard. So the only reason I'm seeing it recently is because I probably I'm just able to consume more visual information. It was happening before, but I wasn't catching it perhaps. It's really fast. I mean, what also helps is because now that you can highlight big bid and ask on DAS, that's the reason I'm seeing it, is because it flashes yellow because I have the greater than 2,000 shares highlighted yellow. and I'll see that yellow flash below where I'm at. I'm like, uh-oh, bad news. Buyers just below me, or buyers. So anyway, rambling, but food for thought. Yeah, I'm just thinking, for what Deem is trying to do and what Dash is trying to do, like that could be something I could try to capture in my journal as well. But how? Like, do I add a column? Did I see a flash of yellow below me? Yes or no? How much was it? I don't know. I have to go record my screen like Dash.
Yeah, the issue comes, how do you store all these 1 hour long videos?
Yeah,
So
yeah.
I literally just created a YouTube channel and posting it there using
Hey.
YouTube's free storage.
There you go. It's free. That's right. Yeah. You can put
It's only for me. That's it. I mean, it's public, but it's
great.
for me.
Yeah. You put 6,000 hours of content on there.
Yeah.
Maybe you'll get some subscribers, Dash. You won't have to be a day trader anymore. People are just going to watch
Yeah.
your long videos. Nice. Well, thanks, Deem. I appreciate it. Last week I talked about what I was thinking about taking a look at, and it was this idea that it seems like high day break trades near the pre-market high have a higher probability of resulting in at least a break-even result, and it feels like the pre-market high often acts like a magnet to pull price up to its level and maybe provide a pop above that level. So that was kind of my idea. There were some challenges I identified. Like what does near high day mean? Like how close does it have to be? And I talked about the volatility of the stock and the price of the stock. These things would probably play into the idea of near. So like what does the data set look like exactly? For this week, I didn't actually get into that too much. I just, in my journal, if I thought any level is near my entry and somehow might have had an effect on the entry or the way the stock played, I recorded the level. And I did that sort of visually. And I'd look at the trade and I'd say, okay, the pre-market high was nearby. I think it was close enough that it may have had an effect on the entry and how the stock played out, red or green. And I would record that. So in my spreadsheet journal, I have like level 1, level 2, and level 3. Level 1 could be the pre-market high. If there's another level nearby, like R3, and I think that might have had an effect on how the stock played out, I'll recapture that one as well. And I don't do more than 3. I don't think I've ever had 4 levels grouped nearby anyway, but I guess I could do a 4th one if I wanted. In any case, in my journal, it's a gut instinct of whether or not the pre-market high was nearby enough to affect how it played out. I'm just taking a guess. So I looked through the results, and this is for this year. I had 136 trades to look at, and 89 of them were not near the pre-market high. 47 were, I recorded the pre-market high as being near the entry and may have having influence. Of those, 30 of them, the pre-market high was below the high a day. That's why it's called, I should have made this more descriptive, below pre-market high trades. This is where the pre-market high was below the high a day. And there were 17 where it was above, the pre-market high was above the high a day. And so interesting results. So like everyone, I have this idea that I risk 1 R per trade, but I look at R a little different because I don't often hold for the full loss. I'll often get out above the full loss. I look at my average loss per trade as my true risk, if that makes sense. Because yes, I have a full risk of 1 R, but because I so often, only about 10 to 15% of the time, probably closer to 10% of the time, do I actually feel that whole loss, and I'm getting out a lot more break even or small losses or even small gains. My average loss per trade is 0.39 R. So for that reason, for all my trades, for all 136, if I measured against full R, the result per trade this year so far is 0.24 R, but what I would call the true R is 0.6, if that makes sense. It's 0.24 divided by 0.39 gets you 0.60. So for all my trades, I'm experiencing 0.60 on average as a result. And for my non-pre-market high trades, non-pre-market high, it's actually higher, 0.74. The pre-market high ones, if you isolate them, whether they're above or below, whether the pre-market high is above or below the high a day, it's 0.54, so it's actually less in either case. And then as you start to get into them a bit, the ones that are below pre-market high work better, much better, significantly better than where the pre-market high is sitting above, which actually surprised me. I don't know. I kind of thought this might be the opposite case, just out of gut instinct, or I guess based on what I've seen, just taking these trades. But it was a surprising result, because you kind of want to see something sometimes, right? I have this feeling that this thing does help me get better results, but the initial stab at the numbers says no. Not only is it not really significantly helping, it's actually looks like it's hurting the trades. So I have some more digging to do on this. If you look here, I don't have a huge data set. Even all the trades is not a very big data set, but it's sufficient. I'm comfortable drawing some conclusions on 136 trades, but 17 is not much of a sample. And if you're familiar with statistics, at least if you're dealing with like uniformly, identically distributed, Ricardo's nodding his head, I know he knows this term.
Normal distribution.
Yeah, essentially normally distributed, data, then your minimum sample size you want is 30, and I barely have that here, and I don't even have it here. So it's probably a little bit early to even draw conclusions. I mean, it certainly is. So in terms of next steps, I really need to gather more data and get a larger set. And this kind of gets to, the importance of journaling. 'Cause for a long time, I was thinking I should gather this information about the pre-market high, but I put it off. And I've only been doing it for 2022. And I look back at all the trades I took in 2020 and 2021. I probably wouldn't have known to even think about this until sometime in 2021. But I could have had, a much, much bigger data set by now. But it doesn't matter. It's not like I'm going anywhere, so I'll just keep gathering more information. But I do think I need to examine that idea of nearness, like maybe get a little bit deeper into like the distance of the pre-market high to the high a day in both cases, above and below, and maybe dig into that a little bit more. I might be considering some that are just too far away. I'd have to go back and review. And then there's also the cases. So I was thinking about it. I still feel very confident taking high day breaks near the pre-market high. I like them. I think they do help. But then I thought about, well, how are they helping? It may not be that they're producing bigger winners, but what it might be doing is it might be resulting in an easier break even or small loss trade. They might result in the kind of trades that don't kick me in the teeth. You know what I mean? The ones that don't really hurt. It might be that overall they don't produce. For the ones that really go green and start to run, that they don't produce bigger winners, perhaps, but that it does produce an easier small loss or near break even result. Which actually, those give me about as much of an endorphin rush as having like a green trade. I'm very happy with break even trades. I feel like I escaped death a lot. When I get into a trade and I'm like, okay, it didn't work, but no harm, no foul. Like I lost $5 or I made $1 or whatever. Like those make me just about as happy as winning trades, believe it or not. So when I think back to like all the trades I've taken, and why do I have this feeling that this thing is helpful? Maybe it's only helping me get to break even. So I think I repeated myself 6 times there. I'm trying to think through my own thoughts here. I haven't really fully kind of mentally digested what I found here. But more work to do. But this is what I mean by, just the most basic breakdown of numbers. It doesn't have to be real fancy. This is like step 1 in more advanced analysis yet to come, where I do start to look at the distance of the pre-market high to the high a day, and maybe some outliers too. I haven't really considered how to. I don't think my gut says don't worry about outliers in this case, but there are the cases of I don't have outliers to the red side. I mean, you take your 1 hour loss or something less than it, but you can have an outlier to the green side. You can have a stock that really takes off and runs a lot, and it's just this boomer on your journal. should you count that or not? Some people might suggest, might argue that you would pull that out of your data set, but I don't know. I didn't look at that, so I don't know if that's affecting any of these numbers. But in any case, this being able to do this does show the power of spreadsheet journaling. I mean, this did not take me long at all. I just really quickly went into a spreadsheet and filtered, right on. I took all my trades and I put a filter at the top and just filtered, okay, this column, give me the ones that say pre-market high, boom. I had filtered 136 trades down to 47, and then using a quick little formula, if column, pre-market column is higher than high a day column, then, give me those. And that gave me these 30 and, the same logic to get me these other 17. But you can really slice through it really quick and do some neat quick analysis if you have it in spreadsheet form. Any comments or questions?
John, have you talked to Mike to see if that's something he's done and if there's any results?
I have not, but that's a good point. I mean, it might make a lot of sense for Mike and I to share some journal results. The only reason I'd be a little tepid about that is because when you look at the whole psychology of trading, like he and I have different approaches, so we just have to make sure that you could do that. Well, I guess when you said share, I mean, maybe you weren't talking about actually sharing data, like you give me your data set and I'll add it to mine. Maybe you're just talking about like, is he seeing something similar? But no, I haven't done that in either case. But
that's what I mean, is sharing if the findings are similar.
Yeah, no, I haven't. But actually, I probably will ask Mike because I'm curious what he thinks about this as well. Yeah, that's a good idea. All right. We do have one group member who has a little bit of analysis to share. That's Dash.
I also have analysis to share.
Oh, you do, Ricardo? Did you send it to me?
No, I didn't. I didn't rearrange the slide from last week, but I created a whole presentation on the side that I can share screen afterwards.
Okay. Did you share that on Slack or something? Or that sounds familiar now.
No, I shared the PowerPoint layout that I used to journal my trades.
Okay.
Because another thing.
All right.
Yeah, don't worry, but I'll take the stage to Dash.
Okay.
Yeah. So I'm currently looking at if the 9 and 20 moving average cross on the 3-minute chart can, has anything to do with my trading. I use the 1, 5, and sometimes the 15, depending on the time of the day. The entry is always dependent on the 1-minute cross, and I would use 2-minute chart as well sometimes. But then I think I heard Thor mention in the chat room that he is also looking into 3-minute. So I just started looking into it, and what I found was a lot of my winners, or the cross was much clear on the 3-minute. At least I felt like that once it happened on the 3-minute, it gave a really good run, and had a really good like the pattern that I would actually want to trade, which could give me a good R&R. So I started looking into it. The only issue is I didn't have a lot of data. Even right now, I probably only have like 23 or 25 trades that I've actually captured data on. So I need to go back in time and capture the data on the other 100 plus trades just for this strategy, and also continue on collecting more data. John, do you have the results slide? Yeah, so this is just based on the data that I currently have. What I found is if the cross happens on both the 1 and the 3-minute, it's going to be a winner or it'll be a break even. So my takeaway from that is that obviously one thing is my entry is based on the 1 minute. If I wait for the 3-minute cross or the 5-minute, the entry will be too extended. My risk to reward gets screwed up completely. I'll have to wait for a very long time to reach my target. So the entry has to be on the 1 minute. But the 3 minute can act like a confirmation whether or not I should continue staying in this trade or look at exiting. I use the same like stop loss policy, I think, as John. I never take a 1 hour loss, but I manually exit the trade at, let's say, 0.4, 0.3. With this, it helps me get out earlier on losing trades, and now I'm trying to use this as something to hold on to trades for much longer. Earlier, I would, get out at 0.8 hour, 0.9. 1 hour I would get out completely. Now I'm looking at getting out at 1.5, whereas my manual stop was at like 0.2, 0.3. So that gives me a actual risk to reward ratio of higher than like 2.5 or 3, that kind of a thing. So I'm still collecting data. Let's see what comes up. One thing for sure I know is right now, if there's no cross on either of the time frames, don't take the trade. It's going to be a loser. So just look into it more. See, I definitely want to be on, the winner and break evens and minimize the losers. So that's it. Any questions? Okay.
That's cool, Dash.
Thank you. Yep.
Yeah, I'm interested to see what you find out with some more information, and it's good to recognize what you want to know about, and then take a look at how much information you have, and you get an idea of you probably have an idea now based on how much you have and how long you've been collecting, like when you can expect to have enough data to maybe make a true decision. But that'll be an interesting result to see. I know so many people use moving average crossings as indicators and decision points, and I kind of feel like, I don't know, I'm always curious about that because I don't use moving averages at all, and maybe to my detriment, maybe
Yeah, actually Eamon was talking about it just today in the morning meeting. It was
Yeah,
really
it's true. It's
yeah,
true.
it's
Yep.
really interesting.
Yep. No, Eamon does use moving averages, right?
Yeah.
Yep. And Brian, if you know Brian, he's not on the PCT side of things, but he's over on Bearable Traders, one of our morning guys. I mean, he's a huge moving average guy, and he does well. It's definitely a big part of his trading.
Yep.
Very cool.
It's really cool what you did here, Dash, so congratulations. And
Thank
you. If the same results expand from the 22 trades that you have here to your whole data set, this can lift off your edge based on the MA crossing. So it's really interesting that on no loser you were able to find a crossing on both 1 and 3. It's a game changer in my opinion.
Yeah.
Thank you. What's your break-even definition, Dash? I'm always interested about what people consider a break-even trade.
Well, I get out at my price point, or sometimes I even consider like maybe negative 0.1 as also break even,
right,
because my risk is so small. I mean, it's fine. That $1, $2 loss, even with slippage, is okay, as long as I'm recognizing that. Okay, so let's say that sometimes in my strategy, what happens? The price comes back to VWAP, just goes, makes a wick above VWAP and then crashes down.
Yeah.
If I am letting my trade breathe that small wick, and if I get stopped out, it's fine. It's still break even, but I do want to let it breathe to see if the price opens and closes above VWAP. That's the only time that I would want to seriously consider getting out. Yeah. So break even for me is if I get wigged out during that time, it's fine. That's right. Break even for me.
I personally think break even trades, to consider yourself to be break even or not, should be a personal decision about whether or not you decided to get out of a trade close to your entry. And I don't think it's to the penny. Some people measure it that way. Like if it's to the penny, that's break even. Anything else is green or red. But like for me, like today I took MU. I was in it for a minute and a half, maybe 2 minutes at the most. I didn't like the way it felt. it really felt like this is not the trade I thought it was, and I got out and I lost $6. I don't consider that a red trade. I don't have a statistic for win, loss, break even. It's not something I use, but I in my mind I don't consider that a red trade. To me, that's a break even. That's a good decision to get out. And by the way, after I got out, it would have gone down to my full loss, and it could have been a much bigger loss. So I considered it a good decision. I felt the weakness. I felt that the trade was not what I thought it was, and I got out, and I call that break even. So just food for thought. If you know,
Yeah, for my so to avoid slippage, my hotkey has like it places the stop. So if I'm short, it places the stop 5 cents below my entry. So more often, like I would actually make a little bit of amount before being stopped out, but I manually move the stop depending on
Right.
what the chart.
Another way to look at it is, did you beat the spread? So I traded NVAX today, and the spread changes, but the spread was around 20 cents. If I beat that spread, and made, more than 20 cents on the trade, I might consider that, all right, that's green. I got onto the ask side of things, so to speak, and vice versa. That's another way to potentially look at it. But anyway.
Hey, Dash, can you do
Yeah.
us a favor? Would you share if you're cool with this, share your channel for YouTube in Slack? Because I don't trade this strategy, but I would love to watch yours and look at the analysis that you're doing as you're trading.
Yeah,
hear
but
that? I'll be your first subscriber.
just a disclaimer, the videos are way too long. Please forward them. It's like 1 hour long videos. You don't want to be watching the
I
whole
think
thing.
Dash is recording a lot of non-trading, right? Just recording the screen all the time.
Well, no, I start the video.
Oh, okay.
So as soon as I see my confirmation
All
or
right.
my indicators, that's when I start the video.
Okay.
And I stop recording like after I get out.
Gotcha.
But yeah, I'll share the YouTube link on Slack.
Let's get some subscribers.
Thank you.
Hit that like button, Chad.
That's how it starts.
That's right. All right, Ricardo, I'm going to try to make you a host here.
Yeah, that would be gorgeous. Because I didn't read the whole through your email. Apologies, John.
That's
I
all right.
forgot to send it to you. But yeah.
I am not presenting right now, and you are a co-host, so I think you can present.
Okay.
It's the button down at the bottom. It looks like an upward arrow.
Yeah. Okay. Are you seeing my PowerPoint? Wait,
We
not
are,
yet,
yeah.
I guess. Are you seeing my PowerPoint?
Yep.
Awesome. Okay, so
No, we are seeing the presenters mode.
the presenter's mode.
Yeah, can you put it in full
Right.
present mode?
Let me do something else. Okay, wait. Now you're seeing yourselves, but this will change, I think. That's right now. Oh wow. Okay. Now you're seeing only the presentation or the presentation mode?
No, we're seeing that infinite loop thing with all our faces going on forever.
Okay. Did I stop share already?
You are not sharing at the moment.
Okay.
You can try the original method, Ricardo.
Yeah, I'll just do the normal. Let me take out of the presenter's mode. Yeah, seeing the presentation normally.
We are seeing it. We see your PowerPoint. It's not in any kind of presentation mode. It's in like edit mode. Try this.
Yeah, but we can read it. It's fine. You can just continue presenting.
Yeah, it's
I think if
fine.
you hit the slideshow button, it's actually a little bit bigger.
Yeah, I'm hitting the button.
No, it's not doing anything. Huh.
Let me try F4. Okay, strange.
Well,
Oh, wait.
You know,
I
we-
understood what is going on.
we can read it, I think. We all have giant day trading monitors. It's okay.
Give me just one more chance. I was sharing the wrong screen. Screen one. Okay. Let's try now one last time. And no?
No, this
What are you
is
saying?
this is fine, Ricardo.
Okay. Okay. So last week I basically had the idea to do a stop loss analysis for both my ABCD and reverse ABCD trades. So the title takes back again to be or not to be to the Shakespearean quote, but for a trader of ABCD and reverse ABCD patterns. So today what I want to guide you guys through is basically my initial problem statement. So the idea that I had last week, the data collected that I gathered, plus the rules for this particular data collection, the analysis of this sample, and my main conclusions. Throughout the presentation, obviously feel free to interrupt me at any time, and if you don't understand or I'm speaking too fast, I'll obviously slow down and go back. With regards to my problem statement, basically I wanted to check if it's more beneficial in terms of Rs, so return, to move the stop loss to break even after taking a partial at either 1, 2, or 3 Rs, or to keep the initial stop loss until the target or that particular target is met, with the goal or intent to understand what's the best profit-taking plan to both ABCD and reverse ABCD strategies. With regards to the data collection, the data gathered was only trades that I actually used the ABCD strategy and reverse ABCD strategy, obviously, and I only covered trades from the starting of the evaluation period until the end of February, because I already produced a report or statistic also on that particular time frame. So in line with that report, to take further conclusions on my trading, the objective is obviously to extend it to March and onwards. So a couple of trades were not considered. Which ones? Trades where I was stopped out almost immediately after I entered the trade. So those, the profit-taking plan was, I followed, obviously. It was being stopped out, so I didn't move the stop, which is great. It was the first time that I got super happy of being stopped out, because the more I got stopped out, the less trades I needed to completely analyze. The second one is trades that I exited only to take a smaller loss than 1 R. These were not considered again because those trades I took. So it reversed the trend that I was expecting it to take. So it was hitting my stop loss, and it hit my stop loss in the future, but I took a smaller loss, again, not considered. And finally, repeated trend trades. So trades that were taken straight after I fully exited a position on the same direction of the previous one. What do I mean by this? It's basically taking a trade because I'm seeing an ABCD pattern form, exiting completely, and then re-entering the trade because the pattern is still not broken. So I only consider the first trade of that sequence and not the following ones, in order to keep my sample as clean as possible and don't have any duplicates on the same tickers, because that would destroy a little bit my sample set. With that initial sample set or that initial criteria done, what did I search for on the trades that I actually collected? First, when did I enter and at what price? Where was my initial stop loss placed? If it was a technical level, above or below C, if I entered close to point B, if my stop loss was above the high of the previous candle. Thirdly, what was the R for that trade in dollar value? Did the stock ever come back to the initial stop loss and came back to the entry price? So first a yes or no question, and then the actual minutes that it took for that ticker to either go back to the initial stop loss, entry price, or both. How far did it trend before hitting the initial stop loss in terms of Rs? And if I took, lastly, if I took profit at 1, 2, or 3 Rs and moved the stop loss to break even, how far did it go after in terms of Rs? So far so good. Is everybody following my reasoning? Yeah. Okay. I'm going to assume that silence is a yes. Okay. Just an example, just so you can understand a little bit more visually what those trades were that I included on my dataset. This is a simple example on NVIDIA taken on the 22nd of February. I actually traded NVIDIA. I took 5 trades that day on NVIDIA. I considered only 2 due to the criteria listed below. So previously. So only two trades. Why? 2 were stopped out trades, so completely crossed out from the beginning. Exiting and trend continues on 2 trades. So this trend was actually taken twice, but only considered once on the data set. And the new trend later on the day, because NVIDIA, as you can see on the 5-minute chart, came back up, and once it reversed back down, I tried again a reverse ABCD. Okay, so this is just a smaller example. Another data that I obviously collected is the entry price and stop loss, as you can see on the slide. They actually are in dollar amount, and the dollar price of whenever a new R was reached. Okay. On the 5-minute, and this was just to help me out visualize while I was collecting data, I always draw horizontal lines to understand if the initial stop loss or the entry price was being broken or not. And you can see also on the 1 minute, the dark blue lines is the 1R, 2R, and 3R profit targets, and the vertical light blue line is when I enter the stocks around 11. And as you can see, and the interesting part about this data gathering is that sometimes the targets are being reached, but then the stock reverses to the entry price, which, as you'll see, a little spoiler alert, this varies a lot, the progression of the stock later on, where you're taking profits, and if you're moving the stock to break even or not. Okay. So, with this being said, and taking in consideration, I have 107 trades between the last 3 trading days of January and the whole month of February. I was only able to get 19 trades with this criteria for the ABCD pattern and 24 trades for the reverse ABCD pattern, which is impressive on the negative because the samples are really small. The average distance between the entry and the stop loss for the ABCD trade is $1.89. The stocks that I traded the most were just 2 times each: Apple, Google, AMD, Snapchat, and Alibaba. After the entry, the stock came back to the initial stop loss 12 times of the 19 trades considered, and it came back 16 times to my initial entry price. Without moving the stop loss, the stocks ran on average 5.18 hours, which is also extremely impressive. Looking to the right side of the slide, the reverse ABCD trades were 24, so a little higher than the ABCD trades. The average distance between the entry and the stop loss is less than on the ABCD trades that I take, so it clearly indicates that my stop loss is normally tighter on reverse ABCDs compared to my ABCD pattern trades. Stock that I traded the most were NVIDIA and AMD. NVIDIA, I'm actually trading them, and I almost always get losses, which is not nice to find out that reverse ABCD is the ones that I'm trading the most. After entering the stock, the stock came back to the initial stop loss 16 times out of the 24 and 17 times to my initial entry price. Did somebody say something?
I have a question, Ricardo.
Yeah.
This is great stuff. I love it. On the last point, without moving the stop loss, stocks ran on average 55.18 hours. When do you check that? At the end of the day? So is it 4 p.m. or is it when you're done trading?
I'm checking that based on how far did it move the direction of the trade taken. So on this case, the ABCD, as soon as I enter the trade to the long side, best case scenario, I would catch 518. Then it started coming back down. Is that clear anymore? So to the long side, my biggest opportunity for that particular trade on average was 5.18. Okay, so profits could be taken without moving my stop until 5.18 hours on average. So my stop wouldn't be activated.
Okay. Thank you.
And the same for...
So, Ricardo, my question for that would be, would you actually be holding till that long?
We'll-
Or would you
we'll-
get out at 2R or 3R?
We'll get to that in the next couple of slides. It's not going to take too long, I promise. Know that you have better stuff to do and to listen to a Portuguese analysis on ABCD and reverse ABCD trades. But yeah, basically this was just the first glance of the super small data sets that I gathered, which is the most frustrating part about this. But first glance, the stocks can actually run, which is super positive, taking in consideration the market conditions that we're seeing, at least that I'm seeing. So jumping for the main conclusions first of the ABCD trades. Looking at the table, I'll take your attention first to the last 3 rows of the table. So the probability of reaching 1R and not touching the initial stop loss for the trades that I took is 89.47%, which is insane. The probability of reaching 2R is 68.42, and the probability of reaching 3R without touching my initial stop loss is 52.63. So I could actually more than half of the times let them run until 3 Rs, looking just at the trades that I took on February and on the last 3 days of January. Yes. Okay. Looking at the first part of the table, this is what we call conditional probabilities. So I'm basically inputting a condition to get this statistical data. And what do I mean by that? Looking at the first question, taking a profit at 1R plus moving the stop. So this basically means that for this probability, I'm only consider the probability that if I actually took profit at 1R and the exact 1R, and automatically at that point, I move the stop to my entry price, how many trades in this specific scenario were able to run to 52, to run to 2R. Is this clear? So reaching 1R, I automatically take profit, doesn't matter how much, and the stop loss is moved to my entry price, so to break even. 52.94% of those trades reached 2R, okay? The same reasoning for 3R. So again, if I took profit at 1R and moved the stop, the probability of reaching 3 Rs was 35.29%. If I only took profits at 2R and not 1R and moved my stop to break even again, the probability of reaching 3R is 46.15%. This leads me to my main conclusions on ABCD trades. First and foremost, stocks are coming back to my entry price. More often than not, the stocks are coming back. 16 out of 19 trades considered. It's huge. So we're getting more or less like boomerangs on the trades that I'm watching daily. So they'll run, but they'll come back. Okay, 84.21% of the trades come back, which is dangerous. Okay. Second and main conclusion is that in fact stocks can run, as you've seen, on average 5.18 hours. It's more than enough, and I'm definitely not letting them run as they should. Third conclusion, moving the stop loss after reaching 1R decreases dramatically the chances of reaching 2R. It's minus 15.48 chances if I touch the stop loss, and decreases the chances of reaching 3R. How did I reach these results? Basically, looking back to my table, as you can see, the probability of reaching 2R is higher if I'm not touching the stop loss, which is the second row starting from the bottom. So the probability of reaching 2R is higher if I don't move the stop loss, the initial one, then taking profit at 1R, moving the stop loss to break even, and reaching it, which is 52.94, which clearly gives me the indication with 19 trades. So unfortunately, the data set is ridiculous. It shouldn't be even a data set. So to move or not to move on ABCD trades, my final answer is actually not to move to 1R, but it's doable to move to 2Rs, even though the probability of reaching 3Rs decreases by 6.48%. Questions so far? I hope the silence is your understanding and not complete confusion by this point.
No, I mean,
Yeah.
not a question, but Ricardo, this is really good. I mean,
Thank
now
you.
with all this data, you should have talked to Mike, right? I think Mike presented the to move or not to stop, not to move
Yeah, it's
thing.
true. I'll obviously share this with you and my data collection. Just going through the final conclusions now to the reverse ABCD, and now it's when this gets interesting because the results that I reach are different, so unexpected once again. So looking at the same table as before, the first column is exactly the same. The probabilities obviously change. Looking at the last three rows, the probability of reaching 1R for my reverse ABCD trades is 83.33%, 2R 41.67%, and finally 3R 1/3, so 33.33%, taking into consideration that I wouldn't be touching my initial stop loss for these three rows. If, in fact, I changed my stop loss, the story is different. So profit at 1R and moving the stop loss, actually reaching 2R increases, which is really interesting. So the probability is 60%, showing me that reaching 1R can be a good sign that actually reaches 2R, but protection would be needed because 41.67% is way less compared to 6. If I took profit at 1R, move the stop, the probability that reaches 3R is 35%. And finally, taking profit at 2R and moving the stop again to my entry price, so break even, the probability that it reaches 3R is 58.33. Final conclusions once again. The first one is basically the same. So the stocks are again coming back to my entry price. 20 out of 24, which is massive. 83.33% of the trades came back to my entry price. Again, and the stocks can run far, but less on the short side than on the long side. I can still hit my targets easily. So 3.10 hours, it's more than enough. I'm only looking for a 2-to-1. But it's less than the 5.18 hours that I'm getting on the ABCDs. With regards to moving the stop loss, moving it after reaching 1R increases dramatically the chances of reaching 2R, plus 18.33% chances, and increases the chances of reaching 3R, which is the complete opposite of the ABCD conclusions, which indicates me that it decreases. So I will try to make changes according to these 22 trades and see how it goes. Last but not least, to move or not to move, on the reversibility trades, I definitely choose to move at least to 1R once 1R is reached, but once 2R is reached, this small data set is telling me to move again because my chances that it reaches 3R increases by 25%. And this is all. Thank you for listening. And if you have any questions, please feel free.
Thanks, Ricardo. Yeah, I would take the when you asked for if anyone had any questions and you heard silence, it's only because I think you laid it out very succinctly here. I mean, that was really well put together. Usually, when I ask people if they have questions, I've confused them, and they don't know what to ask. But that was really well put together. That shows a lot of thought, some really logical analysis, and very cool results. And like you said, maybe back it up with a bigger data set down the road, but like all of us. But yeah, that was really great.
Thank you.
Yeah, I love it too, Ricardo. This is great, and this is the way to maximize profit. And the more data you have, the better the results are.
And this is some of the hardest analysis to do, is the how to take profit analysis, or how to. Well, it's more or less the same thing. Moving your stop to break even. How to get the most out of your money. So that's I always say that's the hardest analysis to do in trading. It's not the entry. It's how do you get the most out of your trade. So that was really great. Appreciate that.
Natalie, are you trying to ask Ricardo a question?
Yeah, I was going to ask that.
Yes, you know what? How do you move the stop? Do you have like button, script?
Yes, I have a button that so I have a hotkey to take profits whenever I see fit, and I also have an hotkey to move the stop to break even, I will send you through Slack the script
So
for both if you want.
I'm sorry, you have hotkey and you do double click on the chart, right? And it moves your, the actual script isn't hotkey, right?
Yeah, so the way that I operate the hotkey is basically I click on the chart of the particular stock that I'm watching once, and I click the hotkey to take profits, and then right after I click the other hotkey. I don't need the double click. I just need to make sure that the chart selected is the stock that I want to take profits from. Is that clear?
Yes.
The break-even key does not require double clicking.
Okay, okay, thank you.
Hey, Ricardo, I have a request. So this will change for each one of us based on our strategies and how we take partials and stuff like that. Is there a template that maybe you have for us to do the same calculations that you could share, just to see how the numbers look for us?
I can show you my template. The calculations were made today with a computer calculation. They're really simple. I can show you how to do them as well. I'll send you the Excel first and foremost. Are you seeing the Excel already?
Yeah.
Okay,
so if you can just share this, it'll be nice.
Oh, yeah, obviously. But as you can see,
Bigger a little bit.
yes, I can increase. But for example, for the ABCD strategy, it's basically, so initial question, without moving the stop loss, how far did it run? And basically the calculation of the highest point following the trend, so to the long side, minus my entry divided by the dollar amount in R's for that particular trade. So looking at my first trade, for instance, my entry price was 170.61, stop loss 170.51. This is basically, this is just a function telling me to take, it's not even necessary here, but because I use a data set with both ABCD and reverse ABCD, this is basically saying to me to take the positive number resulting of this subtraction. So if
I'm more curious about how did you calculate the probabilities?
Okay, the probabilities, for instance, if I took profit at 1R, how do I know that it reached 2R without coming back? I would basically look at how much did it run after before reaching the entry price, okay? And this is already placed here on this column. So for a stock that reached already 1R, it only needs to reach at least 1R to reach 2Rs, because the first R is already covered. So every time here you have above 1, you have the numerary of the fraction, and the denominator is all the trades that reached 1R. So here it would be 17 trades because these ones didn't reach, so I'm not considering them anymore. And from these ones that actually reach, which ones reached 2R? So this one reached. I hope you're being able to follow my reasoning, Dutch. So these ones were able to make it to the second R, okay? Because here with the 139, I already have 1R gained at this stage. You understand what I'm saying? So
Yeah.
here it would be 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 divided by 17. So 52. I didn't understand what Natalia.
So you said, it says if I took profit at 1R, do you sell all positions or just part of it?
Here, that's actually what I was trying to get with my analysis, Natalia. So from now on, what I will do is follow the results that I have on my PowerPoint.
Okay.
Okay, I will share the presentation with you guys on Slack. I'll put it on the group under PowerPoint or PDF, whatever suits you better. Any further questions? I'm always available under European hours. I'm not answering questions under North America time zone hours unless it's market hours, because for me it's already late.
No, thank you, Ricardo.
Thanks, Ricardo.
No problem.
All right, let's close out this meeting here. I just wanted to show one more quick analysis. Actually, I feel a little guilty. While Ricardo was talking, I made this real quick. I swear it took me 1 minute. But just to show some of the simple analysis you can do. This is just a time of day versus R result. This is R based on that average R loss, by the way, that true R I talked about. But this is just a quick scatter plot of my performance versus the time of day. And I don't know if you see anything interesting here. I see something that kind of calls out to me. It's this grouping of dots up here. I mean, this clearly stands out as its own area of performance. And if you notice, this first dot's right about here. This is 9:30 and this is 10, so this is about 9:45 right here. So it looks like from about 9:45 to about 10:30 is perhaps a sweet spot. You know, maybe I should be more patient. You know, and I've been feeling this a lot lately, especially in the current markets. When I get in the first, I always wait 5 minutes, but the 5 minutes after the open to 15, I've just been having so much more trouble there. And you can see how many break-even trades there are. There's a few winners. There's a lot of losers. It's just not a lot of good performance here. Not a lot to write home about. But this is much better. So this is the kind of stuff you can do. Just if you spreadsheet capture your trades, you can get some very quick information like this. I know TraderView does this as well. It does give you performance by time of day. I prefer scatter plots over bar. The TraderView does a lot of bar charts. And I think these are a little more descriptive. But in any case, just one more John ad for collecting data, and I'll shut up about it now because I'm sure everyone wants to get on with their night. But thanks for tuning in, everybody. This is recorded, so we'll get this posted if anyone wants to go back and watch that again. And otherwise, if there's no other questions, you guys have a good evening, good night.
Thanks, John. Thanks,
Thank you.
everyone.
Thanks, John. Thanks, Eva.
Okay.
Thanks. Bye-bye.
Bye.
Good night.